Hey everybody, welcome to this free edition of our Trader User Group, a weekly roundup for the trading week ending November 26, 2021. I'm Preston Brent. Thanks for tuning in. This holiday shortened week's theme is Black Friday markdowns. And boy, did we have them, and it was certainly on Friday. And this low volume shortened trading day to end out this week, with Thursday being an all day off day for US markets mostly. We had a pretty good little move to the downside. If we just kind of take a look at where we're going, let me just flip these things around over here, and we'll just go through it real quick. On the index performance, you can see for the week, everybody was in the red. I mean, the Russell really got kicked, 4.15% down. Nasdaq got hurt, S&P, Dow, all of them down. Year to date, still double digits to the upside. The worst performing sector for the week was discretionary, 3.48 down. Energy was the best at 1.66 up. Energy is still the best annually too, year to date, up 51.54%. Staples, the worst performing sector for the year, is still in the green, 8.6%. You can see in the upper right hand corner, the forward PE ratios at 24.11. The 10-year Treasury ended Friday at 1.482. So it really came down hard this week with this scare that we had with COVID, right? This new variant. Earnings yield came in at 4.48%. The S&P yield over the 10-year Treasury is almost 3%. So that's still going to funnel money into the equity markets right now. The VIX had a strong week, finishing up almost 60% for the week, closing out the week at 28.62. So it was a very strong week, really, when you look at it. So if we kind of look at the economic data for the week, we see that it was mostly positive. We had the lowest level of weekly jobless claims since 1969 in the U.S. That kind of one of the drivers of Treasury yields. Sippy Cup Joe came in and formally announced the release of 50 million barrels of oil from the Strategic Petroleum Reserve. That's not going to do anything, to be honest with you. 50 million barrels is only about a little bit over 2.5 days of energy use for the U.S. Historically, that's never really worked. We also got this week, as I mentioned, this COVID variant from South Africa. I guess they're calling it Omicron. So it created a risk-off kind of market for the entire week, where we saw equities, commodities, all of them falling, interest rates also coming down as well. So everything kind of came down. Bonds shot up pretty high. From that perspective. And of course, if we look at the treasuries, as I said, rates came down pretty good, right? Bonds were up higher for the week. We did get Boom Boom Powell. That would be Jerome Power Ranger Boom Boom Powell, our illustrious Fed chair. He was reappointed as Fed chair earlier in the week by Sippy Cup Joe, who also brought in, she's still in, but she was moved up the chain to vice chair, Lael Brannard. She's viewed as more dovish, but Powell came in, so that's kind of a good thing, I guess. Better the devil you know than the devil you don't know, all right? And of course, if we come over here and we look at Europe, let's just take a look at where everything is over in Europe. Everything was in the red here too. Euro stocks, FTSE, CAC 40, DAX, all in the red by pretty good a bit. The worst performer over in Europe was the DAX, German index. Year to date, they're still all of them in double digits except for the FTSE, the London index, but still fairly strong, all in the green, right? Shares in Europe was, they're having a harder time with economic recovery, primarily because the knuckleheads over there won't open the economy. They close it down if anybody sneezes the wrong way. Austria is kind of on a lockdown. It's crazy. We did see Eurozone business activity kind of accelerate in November, according to their PMI index. But other than that, I think Europe's going to have a hard time of it if they keep shutting things down. And of course, if we look over in the Asian markets, you can see the Nikkei was hard, down 3.34% for the week. Year to date, it's up about 4.76. China, 10 basis points to the upside, but China's been having a lot of trouble. Hang Seng down hard for the week and year to date, right? Now, in Japan, they did have strong earnings data coming out for the week, all right? Their flash index for their PMI rose to 52.5. That's a 37-month high in Japan, right? So that's a pretty cool thing. Their services PMI also hit a 26-month high of 52.1. So we're seeing some positive numbers coming out of Japan. We're seeing also their 10th straight month of expansion and factory activity as well. It's the strongest we've seen out of Japan since 2018. So Japan is holding up most of the Asian markets. But of course, if we shift down to China on the chart there, you can see Chinese relations with U.S. still remain pretty tense. Primarily, we got the status over in Taiwan that's, bringing a lot of action into the markets, especially China-U.S. relations. Also complicating the relations is this past week, the U.S. Federal Communication Commission, the FCC, asked the Federal Appeals Court to reject China's telecoms bid to continue providing services in the U.S. as well. So all in all, not a good thing, right? So really the week ended on a sour note for the markets with the Black Friday markdowns, as I said. I'm going to shift the screen over and show you the charts. We'll go through them fairly quick on this holiday shortened weekend for me and the markets here in the U.S. I'm gonna put you on hold just 1 second, guys. Hang on 1 minute. Let me just figure this thing out here. All right, I'm back with you guys. Sorry about that. So what we're looking at here is the E-mini down a little over 4% from the all-time highs. You can see here at a target pullback anywhere from about 46.34 down to about 45.60 roughly. We're kind of in the middle of that target pullback zone. Notice the 50 EMA is sitting at 45.64. So 45.50 is kind of in my wider support zone down like this. So what I've told our members going into next week, let's see, once we get volume back in the markets, I want to see where the follow through is in this markets. We had very low trading volume for the day on Black Friday. So, and we call it Black Friday here in the U.S. because everybody's, going out and spending money like a drunken sailor in retail stores and things like that in anticipation of the coming holiday season. So you can see the markets, E-mini came down pretty good. Now, I suspect we may get a little bit of follow through, maybe a little bit of a bounce, and then another rollover again. So we've got to be really careful of these bull traps in these kind of environments, okay? If we look at Nasdaq, that came down even harder, a little over 5% down. You can see Nasdaq here, although it's hitting my support point. Okay, my support point in Nasdaq was around 16,000. We closed out the week at 16,043, so fairly close. We're a little bit further north of the 50 EMA, so that'll serve as a kind of a watch guide for us with Nasdaq. And then, of course, if we look at my FANG index, which is custom index I created in eSignal on Microsoft, Facebook, Apple, Netflix, Google, and Amazon. About the same as Nasdaq, to be honest with you. We're down just a little over 3%. Not too bad, really. Not a lot of divergence up here either. So I see some support coming for us in this as well. Now, the one that really got trashed, if we take a look at it, we'll look at the Dow first. The Dow is down over 1,100. Dow futures down over 1,100 points on the day. You can see we blew through the 50 EMA, and we're sitting here between the 50 and the 200 EMA. Okay, so the 200 EMA is going to be my near-term support if we get down there. I think we may have some ongoing momentum. It depends, folks. All of this is going to depend on over the next week or two. We're going to get more detailed data on the variant, this Omicron variant out of South Africa. Can current vaccines correct it and limit the damage that this thing does? Or if not, I already hear that they're already working on a modification of the vaccine to attack it. So we'll get more data over the next couple of weeks. So needless to say, we're going to go into the month of December very choppy with the markets. Okay, I mean just extremely choppy. But the one that really took a beating is the Russell. We are almost, in fact, in the Russell futures market, we are in correction territory officially. I mean, it just kind of snuck up on that one day. If I take it down from the all-time highs, you can see we closed right at about 9.76 down from the all-time highs. We actually were in correction territory during the day, and it moved up just a little bit off the lows. Okay, and notice we're near the 200 EMA. Now, when we had this breakout, I said that we'll probably come back and retest this. And if it breaks and comes down below the 50 EMA, we're going to stay back in that chop mode again. We were in this shaded zone all year long. If you look at this, this is a rut, the Russell Index, and we're just chopping. Around the upper end of the boundary, you wanted to sell it. Down the lower end of the boundary, you wanted to buy it. Now, we had that breakout here, and I said if we break out here, we're going to take out these prior all-time highs, and sure enough, we did. And I said the natural support point is going to be the prior all-time high at 23.66. We didn't even stop for coffee here. We just kept right on going down. It's just really going back to November 15th. The Russell has just been kind of leading the way to the downside, which is not a good thing. And if we look at emerging markets, they hit new 2021 lows. Okay, emerging markets well below the opening price for the year. So we're in the red for emerging markets, all right? EEM. And then, of course, if we look at, let me find it on here. Here we go, right here, Asher, which is the tracking stock for China. Even though it's in the red on my other chart, or the other thing, this includes, it's a little bit more broad-based Chinese markets. And you can see we're in the red for the year. The 2020 closing price was up here, and we're down here. So it's just been crappy all along. Keep in mind, China, they've had issues with property debt, big real estate debt issues. They're trying to stabilize employment. The government is probably going to have to step in and do some things here, but otherwise, it's just been a very ugly 4 or 5 months for China. Ever since Xi came after the tech companies and the education companies over there, it's really sucked. All right, so that's kind of where we're sitting. And of course, if we look at volatility, I'm going to show you a couple things. One, you're going to see the VIX just, it rocketed higher, right? Let me just move this over here so you can get the idea of it. So we're in the down fast market zone of what I look at when I'm looking at the VIX, right? Choppy markets is here, quiet up markets is here. We have not been in quiet up markets until we hit COVID last year. We've stayed in the yellow, zooming up to the red. We're getting up near the pink here, peak here, pink. We're getting up near the peak, so I think it may settle in a little bit, but it's all going to count on where this COVID variant, Omicron, goes over the next 5 days and what kind of news cycles we're going to see out of that, right? I mean, just a huge gap higher. Now, for our members, we put on a trade in volatility, and the way we trade volatility is very successful. We've had 9 out of 9 trades in volatility this year, and 9 out of 9 have made us money, right? So I think this was trade number 10. And we traded a little bit different. If you're not a member of our group, I highly encourage you to come in because we trade all commodities, Treasury markets, as well as equities and the SPX. So we're looking at where the opportunities may exist, where we have a little bit of an edge in the trade. And then usually it works out nicely for us. But you can see how VIX popped up. Now, what I look at when we have a big down, ugly day like that, I look at the front month vol skew. So if we look at the front month of volatility skew, you'll see we're in the red. All right, look at that. Bam, all the way up here. So that means we're in a backwardation. It's called backwardation. Don't ask me why. But the vol term structure between the VIX and the front month volatility futures is reversed. So that means there's fear near term. Now, if we go out to the back month vol skew, and the back month, I'm using December and January volatility futures. And if you look at that, you can see we're well in the, we're still solid in the green. Even with that big move higher, we're in the green. So what that means is the vol skew really is only showing fear through the front month, through the end of this month going into December. But out, the further out in time you go, the fear subsides. Now, if we get this moving into the red while the front month is in the red, then fear is going to be a little bit longer lasting. The other thing is if the VIX right here stays up in this red zone for a while. Let's say it stays up above 20 down in this area here, but stays in the lower area, but in this zone here around 20 to 23 for the next, let's say through the end of Friday's close the next week. That means we could get another spike. That means vol is staying bid higher. So we have to watch this very closely. And then, of course, if we look at treasuries, look at bonds. Bonds here to me is just a perfect opportunity. You can see here, we're back up at the 200 EMA again, right? Every time we get above the 200 EMA or at the 200 EMA, I like selling it, right, or shorting it. And we'll take a look at that this coming week. We'll see if we get a follow through and get a spike in the bond market. And those spikes are great to trading opportunities to trade it to the downside. And look at interest rates. Interest rates spike down because it moves opposite of bonds, right? So you can see where that spike lower hit this fib level right here. I think we're going to gain some support right in this area. I do not see interest rates going much lower unless this COVID mutant variant, Omicron, whatever you want to call it, turns out to be more long lasting. Then you're going to see, and then if you see some more potential shutdowns, more reported cases, then we're going to have to get a lot more defensive near term. Right now, it's kind of a let's see where we come out on Monday and Tuesday, and then buy the dip in caution, looking for a possible bull trap, meaning a rollover, make lower lows before we go higher again. But let's watch this very closely. Okay. I mean, and then of course, if we look at the dollar has had a huge run. It came down pretty hard on Friday. Okay. And let me just move this up to reflect the current move in the dollar. I mean, the dollar has just had a great move. And then on Friday, but I think there's so many longs in the dollar that it's going to be a buying opportunity for current longs. And remember, the dollar doesn't move independent of the other currencies. The other currencies move the dollar and not the other way around. Okay, so the euro, as I've said many times, is about almost 58% of the dollar. It's called the dollar index, to be honest. The yen is about 13.6%, pound about 12%. So you add those up, you're over 85% of the total dollar index. So where those currencies goes drives where the US dollar index goes. So I think it's going to catch itself here and have one more final blow off on the top before it starts going down longer term. Okay. Then of course, if we come down here and we look at metals, gold, kind of a so-so day on Friday, but look at it. It just rolled over, okay? Primarily because of fears that the Fed's going to hike the rates more and people will rather collect interest in gold appreciation. Inflation seems to be, while some people say transitory, some say sticky, I think it combines both. I think gold's going to be over 2,000, but not for another year or two. So let's see where it goes to, all right? I mean, that's what we got to see. Copper is a growth story with the global market. So when the global markets look weak or COVID looks strong, copper is going to sell off. So that's kind of where we're sitting with copper. I think longer term it's going to be choppy until China strengthens up a little bit, and then it's going to make a nice little run. But right now, no. Okay, I just don't see it happening. And then of course, if we go down to the energy markets, oil had the worst day in over a decade or two. Look at that candle on oil. It came right down and hit that 200 EMA. That is ugly. Now, I was telling our members to fade this move here and fade this move here. I didn't predict it would go down here. I thought it would hit maybe the low 70s, and that was about it. You can see I had a near-term support around 79 and going out in time support of around 71.45, so the low 70s. We blew right through it and closed at 68.17. So I kind of overshot that. I do believe we're going to gather some support here, consolidate, and then slowly grind a little bit higher. But we got to watch it and be very careful with these kind of moves. When you get a move like this in oil, generally you go out in time a few weeks, it's a little bit higher than this, but also there's some dislocation in the oil market with this. And it's all going to be driven by where this mutant variant, Omicron goes, right? Nat gas, Nat gas had a strong up move. Look at this. So I want nat gas to climb back up to these levels. If we have a cold winter, nat gas is going to blow right through these levels And if we do, then I'm going to be more interested in putting some shorts on. Right now, we're kind of in a no man's land as far as trading goes. So I'm going to wait till this takes off. I'd love to see it get up in this level here, over 7. And then I'm going to be ready to jump on it. That's kind of what I'm looking at. All right, just as a reminder, everybody, it's a holiday weekend, so we'll take off this Sunday for our members. We'll pick it back up next Wednesday morning in our pre-market trader session. If you're not a member, I highly encourage you to come in. I think we got some good holiday specials running, I believe. But check us out. We're having a good year. I think it's going to be a really interesting finish into December. But next year, folks, is going to offer up some opportunities. There's going to be some wild ass opportunities in 2022. And I think there's going to be some surprises too. And we'll follow it across all asset classes. All right, everybody, have a really great holiday weekend for those of you that in the U.S. and celebrating our Thanksgiving holiday weekend. Otherwise, make it good, enjoy it, and I'll see you for our next Sunday weekly roundup. Take care, folks. Ciao now.